Good morning, ladies and gentlemen. I'm Anthony Tong, the Group CFO here at OCK Group Berhad. And on behalf of the entire team, I would like to extend a very warm welcome to all our esteemed shareholders for joining our 13th Annual General Meeting. It is a pleasure to see you all once again, and I hope everyone is doing well. Before we kick things off, we are pleased to announce that OCK has once again soared above and beyond, setting a yet record high in both our financial and business performance. This remarkable accomplishment is a combination of hard work and dedication poured in by every single member of the OCK team, guided by the visionary leadership of our management team. And I would like to take a brief moment to extend my deepest appreciation for everyone's hard work throughout the year. On today's agenda, I'll be taking you through the presentation where I'll be presenting on the business overview, some key highlights in 2023, as well as a snapshot of our financial performance, followed by a breakdown of our business segmental performance, as well as our future plans going into 2024. So without further ado, let's dive right in. To start off, for those of you who may not be too familiar with our business activities, let me give you a brief introduction of our business segments. We mainly operate in 5 key business segments, starting with our core business, which is in telecommunication network services. Under this segment, OCK provides full turnkey end-to-end telecommunication solutions, which cover the entire spectrum of the telecommunication network services, from network planning, design and optimization, network deployment, operations and maintenance. We also handle turnkey fiber projects, constructing underground infrastructure involving fiber optics. With our expertise, we also build and own lease telecommunication towers in Malaysia, Vietnam and Myanmar. In addition to that, we also manage telecommunication structures for various telecommunication operators in Malaysia and Indonesia. For the green energy and power solution business segment, we own a portfolio of solar farms, and we are also an EPC contractor for solar farms. Apart from that, our power solutions division is a supplier of power generators for commercial, retail and factory buildings. More recently, we have also provided backup power solution services to a few data center projects which we have completed last year, as well as for our ongoing data center projects. Moving on to the next segment would be the mechanical and engineering business segment, which was the business that started it all for OCK. We have expertise and experience in this segment where we do civil, M&E contracting work and maintenance services. Next, onto our 4th segment, which would be the trading business segment. This is a synergistic business that complements our telecommunications businesses. Lastly would be our newly formed business segment under digital solution, which represents a strategic divestment into the group, leveraging on the growing demand for IoT, IP networking and network communication following the adoption of 5G, in addition to the AI solutions, big data analytics, as well as cybersecurity and cloud solutions. Now let's shift gears and take a look at the key highlights that define OCK's stellar 2023. As of 2023, OCK's telecommunication tower portfolio has once again exceeded the previous year, where we now proudly own over 5,500 telecommunication sites across Myanmar, Vietnam and Malaysia. For our managed services segment, we currently manage more than 60,000 telecommunication sites in total, of which 48,700 sites are located in Indonesia, which makes us one of the largest managed services providers there, with a market share of approximately 39%. The remaining 11,300 sites are in Malaysia, of which we have 23% market share. Our solar renewable energy portfolio currently stands at 14 megawatts. We have also experienced growth in terms of the number of solar farms owned and operated by us, which has risen from 22 to 29 farms in Malaysia. Meanwhile, we have also announced and issued our Sukuk program amounting to 700 million ringgit, of which we have already completed the first tranche of 400 million ringgit to par down our foreign denominated borrowings, which are also a test to our robust financial planning and dedication towards driving continuous innovation in the digital era. Next, we are also awarded a contract by the Ministry of Education for the provision of rental services of eco-friendly ICT hardware, with the objective of teaching and learning in Sarawak's MOE school computer laboratories, valued at approximately 48.7 million over the course of 65 months. In terms of the breakdown of our tower portfolio, we now own more than 650 sites in Malaysia with a tenancy ratio of 1.5 times, 3,650 sites in Vietnam with a tenancy ratio of 1.4 times, while the remaining 1,200 sites located in Myanmar with a tenancy ratio of 1.4 times. This brings our tower portfolio to more than 5,005 telecommunication sites across Southeast Asia region, which has been growing steadily. We plan to continuously ride on the momentum to build and acquire more towers the coming years in order to reach our target of owning 6,000 telecommunication sites. Lastly, to top off the incredible financial year, we are thrilled to announce we have declared an interim single-tier dividend of 1 cent per share, totaling 10.5 million ringgit to reward our shareholders for unwavering support in the group's journey. In comparison with the dividend declared in 2021, the total dividend paid increased from 5.27 million to 10.5 million. This translates to an increase in the payout ratio of 24.4% in 2023. Next, let me bring you through the financial snapshot of the group. For 2023, we reported another record-breaking year with strong growth across our revenue, our PAT and PATAMI and EBITDA. On a year-on-year basis, revenue grew by 17.1%, PAT by 12.1%, PATAMI by 11.3%, while EBITDA rose by 11.4%, which were mainly contributed by our telecommunication businesses in tandem with the rollout of 5G network infrastructures. Our balance sheet remains healthy, backed by a total asset of 2 billion ringgit, total equity of 795.6 million ringgit, and total liabilities of 1.2 billion ringgit. Our current ratio stands at 1.62 times with a net gearing of 0.64 times. Now, if you were to look at the year-on-year comparison, over the past 5 years, we have been demonstrating an upward growth trajectory in terms of revenue, EBITDA, PATAMI, all exhibiting compelling growth in line with the increase. And the results speak for themselves, with a phenomenal compound annual growth rate of 11.2% for revenue and 9.7% for EBITDA, indicating our ability to deliver continuous value accretion. Likewise, our profits are also at an all-time high. To further break it down, let's take a look at our revenue streams. As you can see from this chart, our recurring revenue has been on a steady climb, and despite the hindrance of the pandemic, our non-recurring revenue has also since gained traction, growing exponentially with a recurring income of contributing 57.6%, while non-recurring income contributed 42.4% of the total revenue of 722.8 million, indicating the strongest it has been over the past 5 years for both segments, which put us in good position to further benefit given the implementation of 5G telecommunication works in Malaysia. We will next look into the revenue breakdown of our businesses by segments, starting off with the main contributor from our telecommunication business segment. In FY 2023, this core segment accounted for 87% of the total revenue. Meanwhile, our solar energy, which is included in our green energy and power solution business division, remains as a single-digit contributor to the group's revenue, hovering at 8%. Our other two segments, M&E Engineering Service, as well as Trading and Distribution segment, contributed about 3% and 2% respectively of our total revenue. In terms of our segmental breakdown by countries, Malaysia stands as the primary contributor, accounting for 59.5% of the total revenue. This is followed by Indonesia, which contributes 18.7%, Myanmar contributing 12.8%, and Vietnam at 9%. Turning our attention towards the group's outlook for 2024 and what we can expect going forward. We will continue to maintain our two-pronged approach, focusing on growing our recurring and non-recurring segment to continuously seize opportunities and deliver continuous growth. First and foremost, starting with our recurring revenue, our aim is to further strengthen our tower company's presence within the Southeast Asia region. Having said that, we want to replicate our success through growing our tower portfolio locally and regionally via organic and inorganic means, leveraging onto the rollout of 5G network within Southeast Asia region. In addition, we have made progress in Laos, where we have signed a tower leasing agreement with Best Telecom to start on the rollout to build, own and lease telecommunication towers. We are currently in the process of negotiating on the number of towers and the locations to be built. Secondly, we also aim to maintain our status as the leader for network managed services in Indonesia and Malaysia. We hope to capitalize our existing presence to further increase our market share in both Indonesia and Malaysia. Given the promising growth of trajectory that we have experienced in Indonesia, we believe that we will be able to ride on the momentum and continuously grow our market share. Thirdly, we plan to grow our green energy business by actively participating in new large-scale tenders. Currently, we own and operate 29 solar farms with a total combined capacity of 14 MW, and we are actively participating in new projects through government programs and active collaboration with local state governments to build and acquire additional solar sites to further fortify our recurring revenue stream. As for the non-recurring revenue segment, we strive to enforce our position as the largest telecommunication network services provider in Malaysia and to secure more telecommunication infrastructure projects from telecommunication operators, Jurunilai and various parties, both directly and indirectly, as more infrastructures will be needed to support the transition into 5G. As at December 2023, OCK's total order book stood at over 250 million, and we are remaining optimistic in our ability to execute and secure new orders to keep up with the growing demand. What's more, as part of our ongoing efforts to venture into new business segments, ensuring continuous earning accretion, this includes our foray into digital solutions as mentioned earlier, as well as our plans on securing more contracts relating to data centers to enable us to another avenue to grow our earnings. Lastly, we are pleased to share that we have officially adopted a dividend policy to reward our shareholders, of which the target is to distribute 20% of our annual normalized group PATAMI as dividends going forward. This approach ensures that we continue to deliver value to shareholders while also enabling us with an adequate level of reserves to support OCK's future growth. To conclude, OCK approaches the future with unwavering optimism and believes that we are well poised in growing our tower portfolio given the rising uptake and widespread adoption of the 5G spectrum. We are anticipating both the telecommunications and renewable energy sector to grow hand in hand as we navigate through the digital landscape while fostering a more sustainable future for generations to come. This brings us to the end of my presentation. I hope this has been an insightful session for you all. I would like to extend heartfelt thanks to everyone for taking the time to attend OCK's 13th Annual General Meeting today. We look forward to seeing you again next year. Thank you.